Hey, Sandy here with MacKay Realty Network, and in this video I'm going to share with you how you can find hidden real estate deals in the most obvious of places. So the thing that most people are trying to do is they're trying to find, these hidden ways of finding awesome real estate deals. They're trying to come across these new artificial intelligence tools, these technology tools, all these different things that are out there. And yes, of course, all that stuff is disrupting this at some point. But what I found in real estate investing is that it's not actually about anything to do with technology. It's not about anything except for finding the biggest problems and helping solve the biggest problems. And it's about people. And the more you can get in touch with the people, the sellers in this case, and understand what their problems are, the more you can get in and fix it. And you can be that problem solver. And the higher and bigger problems that you solve, the bigger and better paychecks you're going to create for yourself in that process. So there's three real keys to doing this. And these deals can be found all over your local multiple listing service, which is one of the things that most people don't realize, where I've bought most of my properties over the years, and majority of our clients end up buying them this way too, is these deals are right there on the open market for every person to see. They're not in someone's back pocket. They're not under the radar deals that come across only my table because I've been doing this for a dozen years. Of course, we come across those at time to time. And the more you're involved in the business, the more you network and grow and meet new people that are doing this, the more you're going to come across those inevitably. But I can speak to my own portfolio that at least 80% plus of what I've purchased has been on the MLS. And the reason is because if you're waiting around for that super home run deal that's going to come across your table once a year, if you're active in this business. If you're not as active, that might be once every 10 years, where you're not in the market. And being in real estate, in the market, is how you build wealth. It's not by waiting for that home run deal. It's by hitting singles, the odd double, the odd triple. And actually, the more you get out there and do those types of deals, the more you're actually going to find that hidden home run that other people can't find because they're not as active and they're not able to take as quick of action as you are because you're so active. So you've got to get out there and put yourself in the right position to make these deals happen. And the MLS, your local multiple listing service, is the place for this to happen. And so here are the three ways that I look at these deals, and we can find some of these hidden deals that are right there out in the open. So the first thing you need is 2, possibly 3 good connections that can help you navigate this information that you see on your MLS. Number 1, for sure, you need a great realtor, a great investment-focused realtor that understands this data as well, so they can help you navigate and weed out some of the excess data that's there that you don't need to know about. Number 2, you need a good property manager, because they're going to help you weed through that information as well, but they're also going to know a lot more on the rental data and what the current market allows for in terms of rents, what the environment is, what the costs are for certain maintenance and repairs and that sort of stuff. And number 3 is a mortgage broker. You should already be in touch with a mortgage broker anyways. If you're looking at real estate deals, it's the first place you got to start, is to go understand your financing situation. They also might have access to data that is not available to the public. Things like, what is currently owed on the property, how many lenders are currently on title. And understanding that information is really helpful. Your local realtor is going to be the number 1 source, because they have access to all the listing data. They can tell you if that property has sold before maybe and not closed, or if it's been listed multiple times. Because when you're looking at the public-facing version of MLS, you're just seeing a brand new listing possibly on that day, when really that could have been listed 2 days ago, and then they took it off the market. Now it's back on, and it shows day 1 on the market. It might actually be day 101. You just don't know that because you're just seeing it for the first time. So accessing those 3 people are really important, and they're going to help you navigate the next 2 things to look for when analyzing these deals. The next thing you want to do is you want to understand the seller's why. Why are they listing this property for sale? What's the reason? What are they looking for? Getting a sense of that is really important, because you could look at hundreds of real estate deals and you could even see the ones that look drastically underpriced, and you might look at it from a straight financing position and say that is an awesome real estate deal. But then when you learn about what the seller wants out of it, you might find out some information that is not going to make sense even at that attractive purchasing price. So what I found is that the majority of deals that we've done, when we've looked back and said that was an awesome real estate deal, it's been about the terms. For example, I've had one property that we bought probably 5-6 years ago now, maybe even 7 years ago. And it's one of the best properties we've ever bought. So this property had some really challenging tenants in there. And it was something that I kind of knew about. I knew the tenant situation was tough there. And I knew that we could maybe have an opportunity there if we put in a term that they had to absolutely get the property vacant and free for us to close on it. And this was something that is in most standard real estate contracts where I am. However, there's often situations that come up, and it's kind of a he said, she said towards the end. If it's not vacant and you're not able to get the tenants out, the lawyers kind of go at it and try and figure out how the heck are they going to close the sale when the purchaser wants the tenants out, the seller's trying to, but can't quite get them out. And so what happened in this scenario was that it took about a year for them to remove the tenants. And in that year, we were just waiting casually on the side, waiting for the tenants to be removed so that we could close on the property. And in that year, we got a little lucky. The market went up about 20-25%. And so in the time it took to close that deal, we had bought it with a massively high appreciation already built in. And so our already nice purchasing price became an amazing purchasing price because we had to wait that time to close it. And so there's things like that if you're aware of the situations and you can negotiate certain terms, that can be really advantageous for yourself. So understanding the seller's needs is where you start with that. And the only way to do that is to reach out to the local listing realtor that has the listing for sale, or somehow getting in touch with that seller direct if it's possibly not on the MLS since it's a private sale or something like that. The questions to ask in those scenarios, a couple of the questions to ask are things like, what are the financing options that are available? Is there a vendor take-back available, possibly? If there's a vendor take-back available, that probably means that there's no mortgage on title, but that opens up a whole wide range of creative financing solutions that might be available to you, and often that means you can pay a higher price to make that deal really good. The closing dates, like I mentioned in that scenario, the closing dates can be really beneficial. You might find that closing really far into the future is beneficial for the seller. You might find that they need to close it next week because they've got certain financing needs, and if you can help them close it next week, then that might be really advantageous for them, and you might be able to get a much better price based on that. Tenant issues is an awesome one in residential real estate, where if there's tenants that have been lingering there and not paying for a long time, or there's tenant issues between the tenants. So in a duplex, let's say, you have an up-down duplex, often there's noise complaints, or there's, who's using the backyard, who's parking where, that often become challenges. And that ends up in the landlord's plate at some point, and they're, having to deal with that all the time, day in, day out, can become really frustrating. And so understanding that, getting a sense of where the challenges lie and what the things that the seller really wants out of this deal can be really beneficial in your negotiations. And so calling up the local realtor that has the listing, asking a few questions, getting a sense of what that is. I found that realtors generally are pretty open with this information. They're more open than you'd expect, and often too open. And, there's a lot of realtors out there, and they're not necessarily all the best negotiators. So if you can ask a couple questions, get a little bit of information there, that might help you see if a deal is maybe a hidden gem that most people aren't aware about, or you could really write off deals pretty easily too, because there might be a reason that it's been on the market for 100 plus days. Often that means it's overpriced, but not always. There might be some opportunities there if you understand the terms. The last thing that you absolutely want to get, especially in multifamily real estate investing or commercial real estate investing, is you need to know their numbers. You need to know what the financials look like, what their pro forma is, what their version of that is. And often the seller's version is way off from what is reality because they're marketing it in the best light. So they're going to show the best version of the numbers that you could possibly put together. Doesn't necessarily mean they fudged them or made them, totally off and totally wrong or false, but they are probably putting it in its best light. For example, they might just conveniently leave out costs such as property management. Often they will leave that out because your cost for property management might be a little different than theirs. They probably are going to leave out the financing costs. So you've got to factor that in on your side. What are you going to actually pay for financing? You've got to look at opportunities on the income side. They might not be taking advantage of extra storage space or extra parking or extra laundry costs, things that tenants would maybe happily pay for that you could factor in and maybe make your numbers look a little better based on that. They are often drastically underestimating the cost of maintenance and repairs. This is one of the biggest ones and something that most investors underestimate as well anyways. But if they're showcasing the property in its best light, then they're probably putting it on the lowest version of maintenance and repairs. They're probably going to put in maybe no maintenance or repairs or a really low percentage of the rents there. Whereas you're running your own numbers, you're going to want to factor in at least 5 to 10% of the gross rents and use that number as a allowance for your maintenance and repair costs. Often that is just very, very, very drastically understated. And all those numbers in itself can make a big difference in making a property look positive cash flow or negative cash flow. And also it can give you some leverage in your negotiations with that seller or that realtor, because if you run your own numbers and now you go back to them and say, hey, we got your pro forma, but here's what we have. This is how I'm analyzing this. And at your price, it just doesn't make sense based on this. Sometimes that creates some opportunities. It creates some ahas in their minds, whereas they might be really stubborn on their price prior to that. If you present them what your numbers look like and you kind of talk through that in a positive way with the realtor, then that might help lead them to self-realize that, hey, their $5 million price point is really should be a $4 million price point, and your numbers now helped improve that, and that talks some sense into them. Now they get a little more realistic. Now you're talking about perhaps doing a deal at a much lower price. So these are 3 strategies that we use a lot, and it does take a bit of work. It does take a bit of time. It is not something you can automate through technology. Real estate is about people. It's a people business. It's about solving problems, and the bigger problems you can find and then solve result in the best investment opportunities for yourself. So don't be scared of big problems. Go find big problems. Those are the best ones to solve. And having those 3 contacts, like I said, the realtor, the mortgage broker, the property manager, are 3 really good contacts to help you solve those problems. And you're going to come across a lot more real estate investment deals if you go and do this all over your local MLS. Don't necessarily feel that you need to hunt down these secret needles in a haystack deals. You're going to come across those anyways. Those can be the one-offs, but go scour your MLS, spend your most of your time on that. That is the secret to finding great real estate deals. That's what us and our team has done for many years. It's how we buy most of our properties. And we've got 15 plus realtors doing this on any given day. And so we're able to source a lot of properties. And so that's how we do it. Hope that helps you. And if you want to learn more about how we do this and our processes and how we can help you do that, then reach out to us, Sandy MacKay Realty Network. We are here to help you build your own wealth through real estate investing, and we'd love to serve you.